Next, Steve, is Intel.
Oh yeah.
And yeah, that was that. What's next, Steve? Intel's revenue came in at 12.7 billion, which was flat and beat expectations. An $800 million loss, 19 cents per share. They can adjust that away if you'd like them to do that. I chose not to do that. Intel's data center group reported about 4.1 billion in sales. So that was a little bright spark, up 8% from the year earlier. But then Intel announced that it actually merged its networking and edge computing bits together to this new data center organization. So those numbers are a bit murkier than before. The company's other big businesses, chips for PCs, is being reported under a client computing group now, and revenue for that fell about 8% on an annual basis to $7.6 billion. And their new foundry business generated about $4.7 billion in revenue, Steve, although almost all of those sales came from Intel. So what you make of that is up to you. So look, they forecasted about $11.2 billion to $12.4 billion next quarter, which is a massive range. And they said that this reflected market uncertainty. So look, this is the first quarter for the new CEO. He's been flown in from a company Steve and I liked quite a lot when we covered it. I think we did a long, not very deep dive on it. Cadence, the chip designing software company. He's the right sort, probably, to get Intel moving again, but whether he can or not, I guess, is what we will see. He said on the call, the first quarter was a step in the right direction. There are no quick fixes as we work to get back on a path to gaining market share and driving sustainable growth, said Lip Bhutan, Intel's new CEO. I am taking swift actions to drive better execution and operational efficiency while empowering our engineers to create great products. We are going back to the basics by listening to our customers and making the changes needed to build the new Intel. With this, Steve, he launched some pretty expanded claims on operational efficiency. Now, Gelsinger was aiming for X number, and Liputan has basically improved all the numbers by about $1 billion and brought one of them forward a little bit as well. So, yes, operational efficiency ahead. But, Steve, I generally thought this was a very uninspiring report. And I guess it's one of those where it might work out for you if like people did, I guess, with something like Rolls-Royce, if investors can plot a path to how Intel gets back to the top, it might work out for you. But sort of key to note, Steve and I were probably saying this around the $60 mark. It's about $20 now, Steve, and it was up about 5% on the week, but down about 7% on these earnings. And I think you can probably see why.
Damodaran has said a few times, in fairness, this was under the old CEO, I think, that there might be value in Intel shares at around 21, or in his view, there might be value in Intel shares at around 21. It's the very first thing you said, which was 12.7 billion in revenues, which was flat and ahead of expectations. I mean, it feels very tobacco company like this. Apart from the fact that tobacco companies are actually quite profitable. But this is, I don't fully understand the way fully understand is too strong. The risk of sounding like a parody of a different investing show. I don't really get this business. I don't understand it very well. I once owned it because I thought it had a large number of advantages, and it turns out those advantages are not as important as I thought they were, and that's kind of the difference between Intel and Rolls-Royce. Intel has a load of competitors doing things better than it, and it's hard to see how they kind of close that gap because they're quite a way behind. Rolls-Royce has things like GE, but it's in a much stronger position. It has much more limited competition in terms of people doing exactly what it does, as far as I can tell. So, yeah, that makes me a little bit more wary about this one here. I think that's an interesting observation about the foundry business, Steve, which is to say they managed 4.7 billion in revenues, you were saying, mostly to themselves. And I think if you just sell yourself stuff all day long. That would explain how you can make an 800 million loss on 12.7 billion in sales. That's a good way of doing it. In terms of the new CEO, guy from Cadence Design, I mean, maybe. And I love him for having a try, but I don't love this company's position at all. I think of the big turnarounds that are currently knocking around in the US. So if you think there's them and Boeing, and to some extent Starbucks, and to some extent Nike are in turnaround mode at the moment. Um, I think they're probably like last on my list of ones that I would buy. I think I'd rather have any of the other ones than Intel at the moment, and that's saying something when Boeing's also in that category. But I think I prefer Boeing to Intel. What do you think?
Yeah, I think I would agree with you, even with the sort of huge debt pile. One of the things that I would probably just sort of tack on the end of that is so Lippertan took Cadence from being about $12 to being about $165 in his when he took over. He's got a master's in nuclear energy by that's essentially his trade. When he was just about to leave university was when is it called 3 Mile Island in America, the big nuclear spillage that they sort of hid from the people around them, the people who lived around the site. That happened, and obviously nuclear energy got taken straight off the agenda, as did all of the jobs. So he kind of went and found something else to do with his career. But the thing I would point out, Steve, is one of the things we sort of highlighted with Pat Gelsinger is he was like well into his 60s when he took over Intel. And for somebody organizing a big turnaround in Intel, you always had that worry in the back of your head with, is he going to be around to see all of it? I mean, how much longer will he want to work at Intel? Into his late 60s. Lippertan's actually a year older than Gelsinger, so the sort of same kind of thing applies to him. He must be mega mega rich from his time at Cadence. Obviously, the stock that he got as part of running that business, he's been able to obviously sell 1,000 10x what it was awarded to him at. And obviously he would have attracted a better and better salary as that share price got higher and higher and the business did better and better. And now he's at Intel and he's got this massive job ahead of him, and now he's already 65, and you think to yourself, well, is he the right man to? Because he's not going to do 10 years at Intel, you wouldn't imagine. He probably won't even do 5. And I mean, how long does Intel need to really turn around? And have they sort of gone from the frying pan and into the fire with the old guy who is very rich and might not want to stick around, Steve?
Interesting idea. I thought you were going to say, does Intel really have 10 years left to live anyway? But it may not the way it's going without getting acquired. In all seriousness here, it might not be around as a standalone company. And it would be a strategic acquisition probably rather than a kind of just bolt-on somewhere. No one's interested in bolting that onto their existing business. Do you know what Gelsinger's doing now, by the way? I mean, not right this minute, but do you know what role he's moved into, Steve?
I just assumed a beach somewhere, Steve.
You would assume that, and maybe he spends most of his time on a beach, to be honest. But he is currently I think, in charge of another tech company, not one you'll have heard of. But if I tell you that they're basically a SaaS company, and they are a SaaS company for, I'm going to say, the least technologically savvy or least technologically innovative industry is maybe even too strong of a word in the world. What would you say he's making software for?
The coal industry.
No, it's the church industry. They are making software as a service for, I think it might be a religious organization, it might just be churches, to be honest, is where I saw he had been popping up, and he's busy. That seems to be, that's very Intel, that, isn't it? Trying to drive tech at church level and working out who's really not managed to innovate at all. I mean, who's maybe for good reasons anti-innovation. It's not really the church's vibe to be tech savvy. They kind of think most of the important stuff has already happened. But it's fascinating. I saw that appear the other day. But anyway, that's probably enough about Intel, you reckon?
Everyone knows Steve Jesus liked an iPad.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account for Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.